Good morning, good afternoon, good evening. Welcome back for another video. In today's video, we're going to take a look at SHIBARIUM, and of course, we're going to take a look at Bitcoin and a few things that I want you to avoid like the plague. But otherwise, let's go ahead and dive on into this. Yeah, I am not starting out with Bitcoin. Shiba Inu. So Shiba Inu developers reveal first look of layer 2 blockchain SHIBARIUM. Ecosystem tokens Shiba Inu, Leash, and Bone, all within the SHIB Foundation, will serve as the upcoming Ethereum-based blockchain. And so, why am I talking about Shiba Inu to start out? And I'm going to take a look at this article real quick, but why Shiba Inu to start out? Because, all right, this is probably one of the bigger things in the news, but also in particular, I want to be abundantly clear with you. I have no shame in saying that I am and will continue to be loading up on Shiba Inu throughout the bear market in anticipation of phenomenal returns next bull run. And I know that that might sound scandalous to you, but I want to remind you, I am not a Bitcoin maximalist. I am not one of those people who will die on the hill of Bitcoin. Bitcoin is my favorite cryptocurrency. I love Bitcoin. I believe in Bitcoin's future more than I believe in any other cryptocurrency's future. However, I have the long in view and I have the short. And when I look at the short, and what I mean the short is the next couple of years, I look at something like Shiba Inu. And yes, I think that Shiba Inu will do very well next cycle. And why is that? Because people during the next euphoria phase, they're going to be pulling out their phones, looking at Robinhood and seeing, oh, Shiba Inu, 0.00000 whatever, you know? And they're going to be wanting some of that with promises, with all the influencers promising them that Shiba Inu is not going that it's going to go to a penny. It's not going to go to a penny. But still, Shiba Inu, I am in significantly. I'm not all in, but I will be in significantly with SHIB before the next bull run. And in positive news and things that will affect their tokenomics make me even more excited. And so why am I starting out with this article? It has to do with one thing in particular, which I will get to as I read this. Upcoming Layer 2 network SHIBARIUM, Layer 2, just like Polygon, just like Arbitrum, just like Optimism, a Layer 2 hoping to improve Ethereum, which actually gives me hope for Ethereum in the future. Not necessarily SHIBARIUM. I am agnostic about that, but I am hopeful about one thing in regards to how it will affect Shiba Inu. But let me keep reading. Upcoming Layer 2 network SHIBARIUM will soon join the ever-growing fray of Ethereum-based blockchains such as Arbitrum and Optimism and Polygon, which for some reason doesn't, I mean, Polygon's not a blockchain, but anyway, looking to solve the problems of scalability, speed, and expense. A beta testnet or a blockchain that mimics real-world functioning is expected to launch in the coming weeks. Layer 2, I won't get into Layer 2, what it refers to, but in an introductory post on Sunday, Shiba Inu developers said SHIBARIUM would have a focus on metaverse and gaming applications, especially as the NFT sector is expected to heat up in the coming years. Apart from SHIBARIUM's use as a cheap settlement for decentralized applications built on the network, and here's what I want to talk about when it comes to SHIB. The launch could contribute to strong fundamentals for Shiba Inu, formed in the previous bull market as Shiba Inu-themed meme coin that has since tried to position itself as a serious project with its own blockchain network. The move could further boost the fundamentals of Shiba Inu's three ecosystem tokens, SHIB, Leash, and Bone, which together command over $5 billion in market capitalization. That's mostly Shiba Inu. Each transaction on SHIBARIUM will burn a certain amount of SHIB tokens. That's what I care about. Okay, so cool. You know, anything that starts as a meme coin that then wants to claim that they're absolutely serious, that they're no longer a meme coin anymore, I'm like, whatever. I'll believe that when I see that. I know SafeMoon was really big on that, and SafeMoon proved to be a scam, just like I said it was. But Shiba Inu has become more bona fide, has become more in the space, and has proven itself as a cryptocurrency that I believe will last for medium term. And by medium term, I mean the next decade or so. I know that my barriers, my goalposts keep shifting when I say medium term. I don't know about Shiba Inu in the long run. All I know is that next time around, next time we have Euphoria, I will be confident about Shiba Inu. And this has me more confident about Shiba Inu. I already love their tokenomics in comparison to a lot of other cryptocurrencies. If you don't remember, SHIB started out, believe it or not, with 100 quadrillion tokens. But as of right now, they are down to a modest 589 trillion and decreasing. This is a deflationary cryptocurrency, but it's not all that deflationary. But even then, even if it was static at 589 trillion, et cetera, I would be bullish about SHIB. But the thing that has me even more bullish about Shiba Inu ahead of the next cycle is the idea that they may be burning, that burn may get aggressive. And so what does it look like if one day half of the circulating supply is burned? Half of today's circulating supply is burned. That gives me a lot of hope, a lot more hope for Shiba Inu, especially when it comes to comparing it to Doge. As far as a dollars and cents comparison, will it outperform Doge next time around? I believe that it will. And why is that? Well, Doge prints 10,000 new coins every minute. I know that sounds like a lot, but they have over 130 billion in existence. But that 10,000 a minute is going into perpetuity. That's 14.4 million a day, 5 billion a year. As of right now, Doge is about 4% inflationary versus Shiba Inu, which is deflationary. And so, guys, what are people going to want to put their money? What's retail going to want to put their money in? Are they going to want to put their money in Filecoin? Now, I think Filecoin's actually going to do well, but we're not going to remember the next cycle, the next bull rally as the year of Filecoin. We're not going to remember it as the year of I was about to say Litecoin. We might remember it as the year of I was just trying to think of the most boring name, the year of Maker. You know, a 1 million coin in existence. We're not going to remember as the year of Maker, the year of Aave, the year of Uniswap. Now, we've already had the year of Dogecoin and the year of Shiba Inu, but Robinhood, retail, you can easily buy Shiba Inu even without Robinhood. This is something that I think retail is going to flood into, and anything that gets me even more bullish about it, I am going to cover that. Because this could be a big deal or it could be a little thing, but regardless, it's going to contribute to the burn. So I'm in, and who knows? I'm more skeptical about what this is going to mean long term, but it's positive news, and it's worth sharing because people are talking about it, and it's one of the bigger news stories right now. But okay, we saw an amazing weekend for Bitcoin and for the crypto market as a whole. It went over a $1 trillion market cap. And so what do I make of this new surge that we've seen? We've seen almost a 30% gain in the price of Bitcoin and in the crypto market cap over the span of a few weeks here. And so I did make a video yesterday, and if you saw that video, you already know, I believe that we are about to enter into an echo bubble or a bear market rally that will move slowly at first, but then catch up some speed, and that we could see a $30,000 to $42,000 Bitcoin coming within a span of about 6 months or so. And then I think it will go back down under the bull market support band. We'll have a few more months of bearishness, maybe even a crash after that, but I think short term, and as far as short term, I mean the next few months, I believe that Bitcoin will do well. But there are a few positives and a few negatives I want to share with you, and I'm going to do it sandwich style: positive, negative, positive. So Bitcoin surge causes over 500 million in liquidations, the highest level of liquidations in 3 months, but the highest level of shorts being liquidated in a year and a half. So June or July of 2021, I think it was July of 2021. Yeah, it was July of 2021. We saw shorts get liquidated to a greater extent than what we've seen now. So crypto markets regained the $1 trillion capitalization mark for the first time since November. Crypto markets surged to regain the $1 trillion market capitalization mark. That's a mouthful. Over the weekend, amid signs of bottoming and a record number of short liquidations contributing to the uptick, nearly 500 million in shorts or bets against higher prices were liquidated since Friday to mark the highest such levels since October of 2022. Data from Coin Analyze shows. Now that's total liquidations, and so that was longs getting liquidated in October of 2022. But you can see in this chart, 2023, very high liquidation levels. That was a surprising move for some in the movement of Bitcoin. The last time, like I said, was July of 2021. The liquidation figure means over 70% of traders booked losses as exchanges closed leverage positions due to a partial, aka stops, or a total evaporation of the trader's initial margin. Crypto exchange OKEx saw 256 million worth of short losses on Friday alone, the most among all crypto exchanges, meaning that Asia was betting against Bitcoin, followed by 125 million on Binance and 42 million on Huobi, which means Asia was very much betting against Bitcoin. Aptos native tokens saw over $10 million in liquidations in an unusual move as prices doubled over the last week. So people were betting big time against Aptos, which I'm not too surprised about, but that's another video for another time. So major cryptocurrencies are up an average of 20% since last week. So people were betting against Bitcoin. That's not too surprising because that was the trend, and the trend was broken. We were trading within a range between $16,000 and $18,000 for a period of about 3 months, and that is logically what you're going to do. You're going to trade in the range, and when you see Bitcoin get to the high end of the range, this is what traders are going to do. They're going to short it, and this time they lost. Most of the time, good traders are going to win, but this time they lost, and so you know what? Traders lose sometimes, even the best traders, and it's going to happen. Now, that is the good news, and there may be more shorts coming because let me tell you something. It seems like, in my opinion, both bulls and bears are wanting the price of Bitcoin to go down. Bears, obviously, because they're going to make money shorting Bitcoin, but bulls because they want to get in. And logically, the place that makes sense is about $19,500. I mean, I'm going to be honest with you. I wouldn't be too sad if I saw Bitcoin go down to $19,500. That's where I have a bid set. There is a CME futures gap at $19,500, and the 200-day simple moving average is $19,500. If you don't remember, the 200-day simple moving average is absolutely significant. When Bitcoin last interacted with the 200-day simple moving average, it got rejected there at $48,000 and then went much further down. That was around the time that Luna was buying Bitcoin, but before the Luna collapse. And so it was crazy on Friday, and it was I was a little nervous about it, to be honest with you, seeing the price blow through the bull market support band. So the 20-week simple moving average, the 21-week EMA, a little bit below the 200-day simple moving average, and then blowing through the 200-day simple moving average. That was a little unnatural, which leads me actually to my next article that I want to point out. And this is more so the bad that I'm just trying to process here, and the thing that has me a little bit cautious that perhaps we're just going to go right back down. I don't think we are, but this is on my mind. So buyers from Coinbase powered Bitcoin higher. Or did they? As Bitcoin looks north, indicators paint a mixed picture of the major source of bullish pressures for the cryptocurrency. Now, I want to talk about something this article says, and then I want to take a look at this article. I have seen some data that shows that it was one entity that was buying up a lot of futures contracts, which was then driving the price higher, which then led to shorts getting liquidated. And so if it's one major player doing this, on the one hand, that's a huge negative because it's just one person. This isn't a sign that the whole crypto market is all in right now. But then the positive about that is that that's what's going to happen as institutions and, dare I say, even nations want to get in. on this is what they're going to try to buy $1 billion of Bitcoin, and the supply will be so illiquid because of people hodling, or because it's just that is what's going on, is that the supply is just getting more and more illiquid. That what's going to happen is that's going to drive the price up much higher, and maybe some of these very deep pockets are just not going to care. They're just going to want to get in because they're going to realize that their currency is garbage and that Bitcoin actually offers them something long term. But all right, anyway, that was a bit of a tangent. The price of Bitcoin has gained nearly 28% this month, hitting its highest height since early November. The popular narrative on crypto Twitter is that traders from Coinbase have powered the cryptocurrency higher, which is interesting when you think about that from the previous article. So who are the shorts liquidated? As I talked about, it was Huobi, it was OKEX, it was Binance, aka it was Asia. Now on crypto Twitter, what you're going to see is the narrative is that traders on Coinbase have powered the cryptocurrency higher. When you think Coinbase, think North America. And so North America was buying and Asia was selling, and North America won. That is the narrative. Because I already told you, I think it's one entity that's been driving the price higher. However, the NASDAQ-listed exchange hasn't been the only source of bullish pressures from cryptocurrency. The Coinbase Premium Index, which measures the spread between Coinbase's Bitcoin US dollar pair and Binance's involving the Tether stablecoin, turned positive last week and rose to 0.039 over the weekend, the highest since late October per data sourced from blockchain analytics firm CryptoQuant, which again means that United States, North America, we're buying more so than Asia is. Asia is more of a seller. In other words, the indicator suggests exactly what I was saying, that buying pressure on Coinbase has been relatively stronger. And so there were some other things here. This tweet from someone who I don't follow on Twitter: exit pump BTC, Bitcoin spot CVDs, whole move from 17K to 21K was made by someone on Binance aggressively buying Bitcoin with BUSD. Other exchanges starting to buy around 19.5K with USDT and USD. Green CVD includes all exchanges with Binance USDT as well. Yellow CVD only BUSD. And so that chart's really fascinating. You can see the buying pressure mostly being from BUSD. So different narratives, like I'm saying. What this person is saying is whoever has been buying it on Binance, that could be Binance.us or Binance.com, which is mostly in Asia. That is an Asian seller, but then buyer, one Asian buyer, but then a lot of other buyers on Coinbase, but also a lot of Asian sellers, or a lot of people shorting getting liquidated. So if it's one person, or if it's one entity, if it's just one player, if it's SBF, I pray to God that it's not SBF who has been driving this price higher, then I would have a little bit of concern that this is just a short-term move up. Now, if you look at the chart, if you look at the 4-hour chart on Bitcoin, you'll see a bull flag, which means that we're going to be spending a little bit of time here and then making another impulse move higher. Most of the time, at least with a bull flag. But it's just, this is something on my radar until we see our next move, is like, okay, if we're going to dump down below 19.5, especially if we get below the 200-day simple moving average in the bull market support band, I'm going to be very concerned that the the bear market rally is going to be delayed by quite a bit. If we bounce from here, then so be it. But I don't think that there's a ton of resistance between here and $24,500, which was our previous top before the SBF, before the FTX dump. On the positive side, I did say that this was going to be a sandwich of sorts. On the positive side, you've got to see this, and this is such a key indicator here. Oh, my green screen. What's going on with my green screen here? I didn't even notice that. All right. So, whatever. I'll fix it in another video, I suppose. It's like 100 of you will be watching this being like, what's going on with this green screen? So, Bitcoin realized cap hodl waves. I have been paying attention to this. I've been waiting for this. I shouldn't say I've been paying attention to this, but I have been waiting for this moment, which is when we would see the Bitcoin hodl waves peak. And so you can see a peak in 2012 and you align that with the price, and you can see a lot of positive price movement from that peak. Same thing with 2015, 2016. You see the peak there, and then a sharp descent leads to a price moving higher, which seems to be counterintuitive, but it really isn't. And then peak in 2019, move higher, and then here we are right there. If you can see it, you can see that peak there. So we're already really high, especially if you consider the fact that in 2015, the amount of the supply of Bitcoin that was being held by all entities was much higher than it was in 2019. And then we have a new peak in 2023 and 2022 that is higher than the one in 2019. So I don't know what to make of it. I did think that at one point, I did think that our peak in 2022, 2023 was going to be a little bit lower. But I think certain market conditions have orchestrated things in such a way that, because of how far below the 200-week simple moving average Bitcoin is, and even below the 300-week, it was at least simple moving average, that people are just waiting to sell for higher prices. And so we're starting now to finally reach some somewhat higher prices. People are actually realizing profits. If that makes sense, they are realizing profits, which means that they bought Bitcoin in the 16,000 range and they're happy, they're content with their 25% gains, and they're realizing some profits. And that's fine. That's fine. But now is the time when we're going to start seeing some of these holders realize profits, which logically would make you think that we're going to go lower. But the way that it works out is that it's just the long-term holders are distributing to short-term holders. And that is what drives bull market rallies. A very large percent of Bitcoin that is held is being held by long-term holders. And the way that the price is driven up is by long-term holders transferring their profits to short-term holders, who some, especially now, will eventually sell at a profit, but many will eventually sell at a loss. And so it is what it is, but this is a very bullish sign. Another sign, I've shared with you plenty of charts, plenty of analytics that make me think that $15,600 was in fact the bottom. This would be another one, or close to the bottom. In other news, and stay far away, far away. Oh my goodness, I can't even believe what in the world were they thinking kind of news. Disgraced 3AC founders are launching a new project called GTX, seeking $25 million in funding. This is amazing. 3AC, Three Arrows Capital. If you remember them, they are the ones who contributed heavily to the falls of Celsius and Voyager and BlockFi. And so now these 3AC founders, I guess they haven't learned their lessons, or I guess they're hoping that we haven't learned our lesson. That's actually more so the more likely scenario. They're launching a new project called one letter above F, GTX, seeking $25 million in funding. I do not want to hear any of you telling me, oh, I'm going to get in on GTX. I don't think any of you will. That's insane. You're insane if you actually do that. Not financial advice, I suppose. The 3AC founders are launching a new exchange with CoinFlex founders. They are looking for a seed fund of $25 million from either big buffoons or people who are shady and are expecting to rip off people, I suppose, for an exchange that will allow trading crypto claims, Voyager claims, FTX claims, etc. The community mocks the new startup from the disgraced founders. So, 3AC founders Sue Zhu and Kyle Davies want to raise $25 million for their new exchange. GTX, is it the new FTX? It sounds a lot like FTX. If 2022 was a crazy year for crypto markets, 2023 has just begun with the disgraced Three Arrow Capital founders looking to raise $25 million for the new project GTX. The three AC founders have collaborated with CoinFlex founders Mark Lamb and Sudu Armugam for this new adventure. Suzu confirmed the news to crypto media Wu Blockchain, saying, "Yes, no comment, just busy building it." All right, so Three Arrows Capital. This is an older article. They filed for Chapter 15 bankruptcy and protection. And so what do we have to say about Three Arrows Capital? And if you need your memory refreshed, already crypto trading firms Genesis and BlockFi have liquidated 3AC positions after they failed to meet margin calls. So they were leveraged to the hilt. To the hilt, I don't know. Deribit also claims that the hedge fund owns 80 million, consisting of 1,300 Bitcoin, 15,000 ETH, and 37.1 million in negative assets. Additionally, one of the biggest creditors of Three Arrows is Voyager Digital. Thank you so much, Voyager, which recently announced that it is pausing withdrawals. The firm claims 3AC owes it over $600 million and is one of the creditors that filed the court process leading to the hedge fund liquidation. It says somewhere else in this article, I'm not going to find it, they got slammed by Luna. So here you go. They were ridiculously over-leveraged. They were very heavy into Luna and into their UST stablecoin. When Luna collapsed, it set off this, this snowball effect of 3AC collapsing, of BlockFi and Voyager collapsing, and I wouldn't be surprised if FTX suffered dramatically from that. And now 3AC wants to start over, wants a clean slate. GTX, are you going to be one of the fools that uses GTX? I pray to God that you are not. Oh man. Oh, and you know what? People have short memories. People will not forget. People will forget. They will get in, and we'll see what happens after that. And moving on. The crypto collapse and the end of magical thinking that has infected capitalism. What should I say about this article? This is an article by a boomer on the New York Times. You can read it yourself. And there are some things that I agree with and some things that I disagree with. I disagree with this idea. And you know what? I kind of wish that this person was right, but I disagree with this idea that this is the end of magical thinking. And so what do I mean by that? All right, so this is a finance professor. And so at a guest lecture at a military academy when the price of Bitcoin, a single Bitcoin neared $60,000, I was asked, as a finance professors often are, what I thought about cryptocurrencies. Rather than respond with my usual skepticism, I polled the students. More than half of attendees had traded cryptocurrencies, often financed by loans. And so why talk about the fact that Bitcoin was $60,000? And that is when he got this unusual question about Bitcoin. Of course, it's because, well, now Bitcoin is under $20,000, or at least it was last week at this time. And so, whoa, Bitcoin was at $60,000 and it crashed all the way to $15,600. Therefore, Bitcoin is bad. And remember that time that it was at $20,000 and crashed all the way to $3,000. Bitcoin is bad. And you remember that time that it was 30 cents and crashed all the way to 5 cents. Man, when are you people going to learn your lessons about Bitcoin? But anyway, he was stunned. How many of them had dabbled in cryptocurrencies? How could this population of young people come to spend time and energy in this way? And I guess he sees this next thing as a negative, but I would say, hey, actually, maybe this means it's the future. And these students were hardly alone. The appetite for crypto has been most pronounced among Gen Z and millennials. What? No. So like boomers aren't into crypto? What? Those groups became investors in the past 15 years at previously unseen rates and with exceedingly optimistic expectations. I think we all knew that there was going to be a crash at some point. It's just the timing was the bigger thing. Now here's where I start agreeing with him, though. I have come to view cryptocurrencies not simply as exotic assets, but as a manifestation of magical thinking that had come to infect the part of the generation who grew up in the aftermath of the Great Recession, American capitalism, and more broadly. And so is he wrong about that? No, because how many of us believe that less than 5% of the cryptos that exist right now will exist 50 years from now? There were 1,000 car companies, and 3 of them at the turn of the century in 1900, and 3 of them survived. It's just, we know that this is the future, but there's this magical thinking going on. But at some point, we're going to disagree. But let me read this next part because I fully agree with this. Where did this ideology come from? An exceptional period of low interest rates and excess liquidity provided the fertile soil for fantastical dreams to flourish. He is absolutely right about that. 100% hits the nail on the head. But here's where I disagree with him. What makes this guest essayist on the New York Times think that this is the end of magical thinking? The thing that would make me think that that we have reached the end of magical thinking is if the Fed at some point just stopped with the quantitative easing and stopped with the money printing. But that's not going to happen. It's just not. These low interest rates, it is not going to happen. And so now we live in this world of funny money, of a currency in the US dollar and in most global currencies, or dare I say all of them, that are, what am I thinking? They're not trustworthy. And so we have to flee. We have to flee to something, whether it's real estate or gold and silver or crypto. And what's going to change about that anytime soon? And that's where we divert. I mean, he hits the nail on the head with a lot of this stuff. But why does he think that we are at the end of magical thinking? We're in this period right now where we can't flee to our currency. And so what do? We have to find the thing, and there are going to be we're going to be more prone to extreme spikes and extreme crashes, not just in crypto, but in the stock market in general, in markets in general, in the housing market, for sure. And so what do? I mean, we can't flee to the dollar. And I want to show you guys a graphic that I saw, and I'm going to be talking about this very often because I've said this a lot, and I'm going to say it again. I'm going to say it over and over, and I'm the only person that I have ever heard talk about this. The biggest threat to the US dollar is the inflation on our national debt. The inflation alone, not the inflation, the interest rates on our national debt. The interest alone. As of right now, federal government current expenditure, our federal debts have reached $800 billion. We are about to surpass Social Security. And very soon, we will pass everything else. Our debts will surpass everything, our entire budget. And so what does that mean? That means we have right now over 5% interest rates. Over 4%, the federal fund rate is between 4 and 5%. And how do they get this under control? Well, I mean, you've got to lower the rates. At some point, you have to bring the rates right back down to zero. And so this guy can claim that we are at the end of magical thinking, but at the very least, we will see the federal fund rate at some point, and I would say at some point soon, go right back down to zero. There is nothing closer to, I'd never say 100%, you guys know that, but there is nothing closer to 100% that I could say that we will see the federal funds rate at zero. And it may not, there was somebody on Twitter who I saw who said the only thing that's going to cause the Fed to lower rates is a recession or a crisis. And I do agree with that if it happened, if we're talking about the next year, but at some point, if it's beyond the next year, if it takes them more than a year to lower rates, at some point, this is inevitable because we are on a runaway train when it comes to just the interest alone on our federal debts. There is a day in many of your lifetimes, maybe not in my lifetime, there's a day in many of your lifetimes with, if things stay as they are, that the interest alone will be, the interest on the federal, on the national debt alone will be greater than the entire United States GDP. Do you think other countries are going to trust us? They're going to trust the dollar? No. By that time, they will have fled. And who knows what they'll flee to, whether it's Bitcoin or maybe some other cryptocurrency or maybe gold or whatever. But the way to kick the can down the road, because that day will come regardless, the way to kick that can down the road is to keep interest rates at zero. And who knows, maybe even negative funding rates. So what happens when they pivot? Well, there'll be a recession. But then after that, it's going to be optimal time to get in for the next big run. All the stuff I've been talking about with this bear market rally, remember, we are in the bear market. And yeah, Bitcoin can do well, but I wouldn't be surprised if a lot of alts flatlined. Ethereum will do fine, but I think a lot of alts will flatline. So anyway, let's take a look at the NFT market. That's a total joke. I just discovered this on coin360.com. But hey, you can see a heat map of NFTs, Bored Ape Yacht Club, a kid called Beast. I have never heard of a kid called Beast. And I don't know where the CryptoPunks are. But hey, new feature on coin360.com. You can see the market cap of NFTs. And I don't know if that's the market cap or the floor price to buy one. I think that's the market cap. Maybe not. I don't know. Who knows? If any of you could help me out with that. I just don't care about NFTs. I tried. I really tried. But let's take a look at the cryptocurrencies here. As the time that I am making this, Bitcoin, the market's flat. And it shouldn't be too surprising because, like I said, look for that bull flag. Next time you look at a chart, look at the 4-hour chart. I don't think the daily chart would show a bull flag, but the 4-hour chart definitely would. And so let's see what happens when we break out from there. But as of the moment I am making this video, Bitcoin is within that range between $21,000 and $21,500. Ethereum between $1,500 and $1,600. Binance a little over $300. Ripple trying to break through that 40-cent range. Cardano 35 cents. Doge 8.4 cents. I'm not touching Doge anytime soon, or Shiba Inu, but I am in general accumulating those, but I am going to wait a little bit on those. Solana, 3x from its bear market bottom because that totally makes sense, right, guys? Anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.